Even before ordinary citizens can begin to celebrate the lowering of cost of credit, banks have cautioned that most don't stand to benefit. Banks have over the last fortnight lobbied to have the bill sent back to Parliament to no avail. While acceding to implement the new law, the Kenya Bankers Association in a statement says, "We do not feel that an arbitrary rate cap is in the best interest of the majority of people and businesses that this law seeks to support." The association further disagreeing with the legislative measure taken, saying there's no evidence to show that such interventions have helped the majority of citizens in other countries where similar laws have been enacted. In the banking sector, up to 40% of banking population are categorized as small borrowers, those who take loans of up to 200,000 shillings. For them, the interest rates vary, most going above 20%, depending on assessment of their ability to repay. That the new law now requires commercial banks to lend them at up to 14.5% as of now could force banks to shy away from facilitating them. Equity Bank Chief Executive Officer James Mwangi alluded to that possibility earlier this week while releasing the half-year results of the bank. Most commercial banks make their money through interest charged on loans, rates that have been varying depending on the risk assessment of borrowers. Analysts say up to 70% of banking revenue is sourced from the interest rates on loans. With the average lending rate being 19%, banks are set to suffer reduced revenue by at least 4.5% for lost revenue, which may go up were the sector to make good the threat of starving a section of borrowers. The banks still have their reservations, and the implications of this decision will begin to be seen in the coming days, weeks and months as the country gets the first opportunity to assess whether legislative intervention to the interest rates works for it or not. Sam Gituku, Citizen Business Center, Nairobi.